What Canada's massive immigration cuts mean for Vancouver real estate in 2025.
Immigration. Let's talk about it.
Own your life.
Brace yourselves, because a massive shift is coming that could completely reshape Vancouver's real estate market. Starting in 2025, Canada is slashing its immigration targets. About time, if you ask me. Not that I'm against immigration, but it was definitely out of hand for a while, and our system was not able to handle it. That's a whole nother discussion, a whole nother podcast. Now, we're talking about upwards of 20% fewer permanent residents and almost 500,000 fewer temporary residents over the next 2 years. That's a drastic drop that could throw our housing market into uncharted territory. We're going from a projected 1.2 million new residents each year to close to zero net growth. If anything, it's possible we could have a negative net growth. For the first time since the 1950s, Canada's population could possibly see a population decline. So, what could this mean for Vancouver's real estate market? Let's talk about just how drastic these immigration cuts really are. This isn't just a small adjustment. It's a dramatic shift that signals a bold and some might say hasty move by the Canadian government. It's almost like the government is going to the extremes on each side, where they really should just be meeting in the middle and finding a more balanced environment. Rather than opting for gradual changes or more calculated measures to manage population growth, the government is literally taking an axe to immigration levels. This isn't something we would typically see from a country known for its open door policy and reliance on immigration to fuel economic growth. These changes are sudden and sweeping, and they suggest a retroactive rather than strategic approach that one could have unforeseen circumstances, especially in areas like real estate, which has long counted on consistent immigration to drive demand. This hard pivot could leave markets scrambling to adopt, and for cities like Vancouver, it's going to mean big changes in who's renting, buying, and even how much properties are worth. Economic impact of immigration cuts. With these immigration cuts, we're likely going to see Canada's GDP projections take a hit. The Bank of Canada may lower GDP growth expectations from 2 to 3% down to closer to 1%, given that a significant part of our economy relies on immigration growth. With this slower economic growth, there's a chance that the Bank of Canada could consider interest rate cuts in the future, even higher than what they had previously planned. And that's where things start to get interesting for the Vancouver housing market, as any changes in interest rates are closely tied to housing demand and prices. Supply and demand. Let's dive into one of the most fundamental principles in real estate, supply and demand, and see how these immigration cuts are going to shake things up. In a market like Vancouver, where housing prices are already sky high, many newcomers are faced with regulations to restrict buying. They'll usually rent first. Immigrants and temporary residents typically drive a huge portion of rental demand because they need a place to live while they're getting settled. So, what happens when you take away such a large group of renters? Simple. The demand drops. Rental rates, prices, they drop. And when demand drops in a market with limited rental supply, you're likely going to see rents either stagnate or even further decline. This means that landlords, especially those who rely on renting to newcomers, could face longer vacancy periods, more competition to fill units, and potentially even need to lower rents to attract tenants. Long-term outlook and market stability. So, what can we expect in the long term? We may see some short-term shocks, particularly in the rental market. With the shift of immigration policy and fewer newcomers, there's potential for an initial adjustment period, no question about it. Yes, these immigration cuts may ease some of the pressure on the high rental prices in the short term, but by reducing demand, they don't address the root issue, the supply side of the housing market. High rents are fundamentally a result of chronic lack of affordability and insufficient new development. While reducing immigration might temporarily relieve some stress on rental prices, it's not a sustainable fix. The real solution lies in increasing housing supply and ensuring more affordable units are available for everyone. I'm looking forward to seeing our government hopefully recognize this and put more focus on long-term solutions that address the housing supply directly, because that's what we ultimately need to make a lasting impact on housing affordability for all Canadians. If you're looking to make the most of these shifts and see if homeownership could be within reach, now is your time to explore your options. Book a call with me and we'll discuss strategies that can help you take advantage of the current market conditions. Whether it's your first home or an investment property, my team is here to guide you through the possibilities and find the best path forward. Please share and like this video with someone. Now, if you enjoyed this video, you're probably going to like this one too. Grab a copy of my best-selling book, Rockstar Real Estate Investing, on Amazon for more in-depth knowledge. I'm Jesse Johnson. Have a nice day. Bye.